Stocks posted solid gains in the first quarter as investors navigated corporate earnings, shifting monetary signals, and troubles in the banking sector. The Dow Industrials rose less than 1%, while the S&P 500 tacked on 7%. The Nasdaq Composite led, gaining nearly 17%. Stocks rallied in January, propelled by cooling inflation, a better-than-feared start to the earnings season, and improving economic data. January's momentum carried over into early February, but poor economic data released over the month dimmed hopes of a pause in interest rate hikes, dragging stocks lower. Stocks entered March holding onto modest year-to-date gains, but selling pressure picked up after congressional testimony by Fed Chair Powell, who said that rates might need to be hiked higher and faster than the Fed had anticipated. Selling accelerated after regulators took over 2 U.S. banks. Fears rose that the banking sector issues were widening after a competitor took over a Swiss bank. But sentiment started to shift after the Fed's March meeting as investors began to sense the Fed was near the end of its rate hike cycle. Stocks rallied in the final week of trading as banking fears eased, leaving stocks with a solid gain for the quarter. In April, companies will start reporting on the first quarter, but the actual financial results may be of only secondary importance. Markets may be more interested to hear what corporate leaders say about the future, especially in light of a more uncertain economic landscape due to recent banking issues. One potential concern is whether a tighter lending environment will emerge as banks look to manage risk. In his post-Federal Open Market Committee meeting press conference, Fed Chair Powell referred to this possibility when he suggested that financial conditions may have tightened more than traditional signs reflect.